The Reserve Bank hikes interest rates and there's more to come. The flood crisis in New South Wales worsens, dashing hopes that fresh fruit and veggie prices will fall anytime soon. And get ready for a shock when you open your end-of-year superannuation statement. It's Wednesday, the 6th of July, 2022. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, I know this probably seems a little self-indulgent, but I just want to share this with you. This is a review that we've received on Apple Podcasts about Fear and Greed. It's the heading says, sharp, relevant, well-paced with a dash of humour. So straight away, I know this is one worth reading. I won't just skip over it. It says, love it, was referred to the podcast by a business associate who, like most of us, is time poor, trying to run a business and lead a team. I was initially put off the name, thinking it was going to have a negative undertone, but far from it. The energy in the Fear and Greed team is great. And Sean, this is the part that I love because this really is about you. The ability to get quickly yet relatively deeply over a wide range of topics is astounding.
Astounding.
You nail the art of connecting the dots in what's going on in key business newsworthy issues with the broader economy. Sets me up for the day to have a conversation in the boardroom, on the street, or at the dinner table. 10 out of 10. Highly recommend. I wasn't going to read the whole lot, but I got carried away. So there we go.
Very generous. It's very nice of the person who gave us that 5-star rating and left that comment. I'm not quite sure what to say. I'm a little bit speechless.
No, all I can say is thanks, Mum. I think that probably sums it up fairly nicely. No, we don't know who it is. And if you want to leave a review as well, please do so. Apple Podcasts is the place to do that, or wherever you listen to podcasts. Now, Sean, immediately after the show, you have a chat coming up with one of our favourite economists, Diana Messina from AMP, about the Reserve Bank's interest rate decision yesterday, which is, of course, the main story this morning, because the Reserve Bank has lifted the official cash rate to 1.35%, up from just 0.1% a couple of months ago.
Yes, Michael, and if passed on by lenders, and that's highly likely, it will add about $200 a month to mortgage repayments on a $750,000 mortgage over 25 years, according to Rate City. By the end of this week, someone with a $750,000 mortgage will be paying about $550 a month more in repayments than they were paying at the beginning of the year. That is a big chunk of money. And of course, at a time when petrol and energy prices are sky high. The reason for the rate rises, to curb inflation and get interest rates back to more normal levels. They were cut hard as the pandemic hit the local economy a little over 2 years ago. Now, Michael, there's more bad news. Reserve Bank Governor Philip Lowe made it clear there are more rate rises in the offing. Basically, the Reserve Bank, like the central banks in the United States, Canada, United Kingdom, New Zealand, and other parts of the world, are trying to cull inflation before it gets out of hand by taking drastic action quickly.
All right, Sean, I'm going to ask this, and I'm hoping that there is a positive answer. You gave a lot of bad news. Is there any good news?
Well, the central bank said it expects inflation to peak later this year and then fall back into the 2 to 3% target range. That's good news. That's when the Reserve Bank is likely to stop hiking rates. Also, and very significantly, medium-term inflation expectations remain anchored. That means people don't think there's going to be ongoing inflation for a long, long time. That's important because if people think prices will keep rising, then they're more likely to ask for higher wages and pay more for food and products and goods and things like that, and it kind of becomes self-fulfilling. So you want inflation expectations to not rise too much. The decision yesterday was made after the Reserve Bank board meeting. The board believes the Australian economy remains resilient and the labour market strong, but it said it will watch closely what happens in the household sector, whether people keep spending and whether they draw down on their large savings, which they accumulated during the pandemic.
All right. So how did local markets respond?
Well, the 50 basis point hike was widely expected, and immediately following the 2:30 p.m. announcement, the ASX jumped higher. By the close, it finished up 0.4% to 6,640 points yesterday. The major banks were mixed, while Macquarie Group was up more than 1%, Woodside Energy jumped 4%, CSL was up 1.3%. The tech stocks did really well. WiseTech Global rose more than 5%, REA was up more than 4%, and Xero jumped 2.3%. The price of iron ore fell below $110 a tonne yesterday. Fears of further new lockdowns in China as a result of rising cases of COVID-19 in some areas triggered the drop. It didn't have too much impact on the local miners. BHP finished up 0.6%, while Fortescue rose 1.7%. Michael, one of our favourite stocks, Bubs Australia, was in a trading halt yesterday as it looked to raise $63 million in equity. Now, the company's share price is up more than 40% over the past couple of months. Keep in mind that the ASX is down quite sharply in that period. Of course, that follows Bubs winning contracts to supply infant formula to the United States. Of course, when there's all this good news, that's exactly the sort of time when you want to raise money. They've done that. Also, Gold Digger Regis Resources, it performed really well yesterday. In fact, it was the top performer of the ASX 200. It jumped 10% after announcing record gold production in the June quarter. Clearly a good thing for shareholders, given gold prices remain particularly high at the moment. The worst performer yesterday was shopping mall owner Unibail Rodamco Westfield, which dropped nearly 4%.
And what about international markets?
Well, investors are always wondering whether to buy or sell. That's basically what they do. When the market has been hammered as much as it has in the past 6 months, it does become tempting to start buying. And there's lots of talk about that on Wall Street at the moment. One indicator is the Bank of America sell-side indicator, which has a long track record. It puts 5 variables into a model and works out what will happen to the market over the next 12 months or so. The bank says historically, when the sell-side indicator has been at current or lower levels, during the subsequent 12 months, the S&P 500 is positive 94% of the time. Now, we are not an investment advisory podcast, of course. Go and find your own financial planner, but the sell-side indicator is interesting. Before we leave international markets, Michael, the Aussie dollar fell in response to the interest rate announcement yesterday, but over the past 24 hours is up a bit. It's trading above 68.5 US cents. Oil prices have risen again over the past 36 hours. Some of the heat had come out of the market on fears of a recession in the US, but now new supply problems have emerged. There's been protests disrupting exports in Libya, and Norwegian oil workers were set to strike overnight. Global leaders, including United Kingdom Prime Minister Boris Johnson, has called on Saudi Arabia to produce more oil. What all this means for many of us in Australia is ongoing high petrol prices.
Oh, so you're finishing with some more good news for us there, Sean.
Much more fear in today's episode of Fear and Greed than greed, I think.
There certainly is. I'm just looking forward to one day finding diesel for under $2.30 a litre.
Won't happen. Won't happen. Well, not for a long time.
Yeah, thank you. All right, we'll be back in a moment with the rest of the day's business news. Sean, Prime Minister Anthony Albanese has arrived back in Australia from a successful trip to Europe, including a visit to Ukrainian President Volodymyr Zelensky.
Yes, he said the struggle of the Ukrainian people against Russia's brutal invasion was inspirational. Mr. Albanese told Mr. Zelensky that he had the support of the Australian people. The Prime Minister also said the invasion of Ukraine had adversely impacted energy prices, inflation and supply chains. Michael, I'm sure the Prime Minister is happy to be home, but he really has had quite the week.
Yeah, it's been an extraordinary week, and he's certainly flown back into a local crisis as well, with New South Wales declaring a natural disaster as rain intensifies and flooding spreading across Sydney.
That's right. Throughout yesterday, there were nearly 160 evacuation orders in place affecting about 50,000 residents, and tens of thousands of people were without power. The severe weather system has now moved a touch north. That's towards the Hunter region in New South Wales. The natural disaster declaration in 23 local government areas will allow federal financial aid to flow to flood victims. And the tanker, Michael, that was stranded off Sydney was towed further out to sea yesterday, or 36 hours ago, but it remains without power, and seas are too rough to allow the removal of the crew or any repairs to begin.
Yeah, pretty nervous time for the crew there. And Sean, while the weather is due to ease in coming days, I presume the rain won't help bring down the cost of fresh fruit and veggies.
No, it won't. Just like earlier in the year, prices for fresh goods will spike once again, or at least remain high. Supply of fruit and veggies were expected to be back towards normal by the middle of next month, but that's now been pushed out. Hardest hit areas around outer Sydney are large growing venues for green vegetables like lettuce, cabbage, bok choy, kale and silver beet. The rain's also likely to hit prices more broadly, including fish and meat prices. More bad news in today's episode of Fear and Greed.
That's right. Now, end of financial year time means, of course, we all think a little bit more about superannuation and how much more money we've got for retirement, or, as is perhaps the case this time around and kind of fitting with the theme of bad news, how much less money we have for retirement.
Yes, it wasn't such a good financial year 2021-22, particularly given the ASX 200 and bond markets went backwards by 10% and global equities were off much more. A good yardstick of superannuation returns is the Australian Super Balanced Option. Now, Aussie Super is the biggest fund in the country, managing about $260 billion, and the vast majority of members are in the Balanced Option. The Balanced Option of Aussie Super's fund ended the year down 2.7%, which I actually reckon isn't bad, all things considered. It's only the fifth time since compulsory super began in 1992 that funds have gone backwards for the year. It's the first loss for the Aussie Super Balanced Fund since the global financial crisis back in 2009, when it went backwards by about 13%. Final numbers for the super sector for last financial year will be released in coming weeks, but the Aussie Super numbers give a hint of what we're going to see.
All right. Now, Sean, Crown Resorts has been fined $100 million by the Victorian regulator for breaching responsible gambling laws following last year's Royal Commission.
Yes, that's on top of the $80 million the company has already been fined by the Victorian Gambling and Casino Control Commission. A nice little present for new owners Blackstone. There could be more substantial fines in the future as regulators warn that they're considering further disciplinary proceedings.
COVID cases, Sean, across the country remain stubbornly high. And yesterday, the Chief Health Officer of New South Wales, Dr. Kerry Chant, said people should disregard anything that was said previously about 2 doses and make sure they get a third jab.
About 1/3 of adults in New South Wales still haven't received a third jab, and more than 1,200 people who weren't up to date with COVID-19 vaccinations have died in New South Wales so far this year. Dr. Chant said the next coronavirus wave had arrived in Australia and reiterated that while existing vaccines provided excellent protection against severe illness and death, they don't protect against the infection itself.
Now, Sean, New Zealand Prime Minister Jacinda Ardern is in the country at the moment as part of her World Trade Tour. She was only here a month ago. She must like the place.
She's a rock star, this woman. I mean, at least outside New Zealand. I don't think New Zealanders think she's a rock star, but outside New Zealand, she really is popular. And so, the World Trade Tour sounds very rock starish to me. Over the past couple of weeks, she's signed trade deals with the European Union and United Kingdom. She hopes to leverage the Albanese government's renewed commitment on climate change action to secure more trade between Australia and New Zealand. Australia has fallen behind China and is now New Zealand's second largest trading partner with two-way trade worth $22 billion a year. Ms Ardern met with Victorian Premier Daniel Andrews yesterday. She'll meet with New South Wales Premier Dominic Perrottet and with Prime Minister Anthony Albanese, as well as give a speech at the Lowy Institute later in the week. She also met with several of the newly elected federal independents yesterday. I loved it. They're all taking selfies with Jacinda Ardern.
Now, Sean, you know how I constantly remind you that you seem to be motivated by self-interest when choosing stories.
Yes.
Well, I mean, I am not immune as well, because we are also on the lookout for higher cost of living expenses and stories about kind of perhaps where we can save money and the places that are costing us a bit more money. Yesterday, we talked about phone bills rising on top of petrol prices and energy costs. Now, Domino's, would you believe it, has introduced a new delivery surcharge of 6% from Monday to Saturday.
It's getting serious, Michael. It really is.
When it starts to hit pizza, you know it's getting tough.
We're in trouble. The new surcharge is alongside a 10% surcharge Domino's charges on Sundays. It also charges 15% on public holidays and 20% on Christmas Day. According to broker UBS, Domino's introduced the surcharge to offset higher costs of ingredients, staff, power and fuel. Now, UBS estimates that about 1/3 of the cost of a pizza relates to food, 1/3 to labour and mileage, and the rest to royalties, rent, energy and marketing. There you go. Domino's share price is down nearly 60% since September last year. It's had a torrid run. Maybe this is an effort to somehow recoup some of that lost ground.
And Sean, just a quick follow-up to your interview yesterday with Dr. Michelle Deaker from One Ventures, the venture capital group. Venture capital investments in June were half the level of a year ago.
Yes, Michelle said capital was drying up for many companies, and these figures from Cut-Through Ventures demonstrate exactly what she was talking about. There were 44 deals last month, totaling a little over $400 million in investment. That is a big drop from a year ago.
Yeah, it certainly is. All right, moving on to overseas news. There are media reports saying that China is buying cut-price coal from Russia, deepening the ties between the two countries, but also potentially harming local coal producers for the long term.
Of course, China banned coal imports from Australia, so there's little immediate effect. But when things between Beijing and Canberra calm, and there are some early signs that both sides are making a bit more of an effort, China's reliance on Russian coal could hurt the local industry. The value of Russian coal exports to China doubled between February and May this year, according to the Financial Review. One thing Australian coal does have in its favour, though, is it's very high grade relative to Russian coal and much more efficient, which is kind of a funny word to use when we talk about coal, but Australian coal is more efficient. Also, local producers haven't actually had too many worries finding alternative buyers in the current energy climate, but in the medium term, this relationship between Russia and China could well hurt our producers.
And just staying in China, Sean, there are reports that US President Joe Biden is considering rolling back some trade levies imposed on Beijing.
China's Vice Premier Liu He discussed US sanctions and tariffs in a call with Treasury Secretary Janet Yellen. The talks apparently were pragmatic and constructive. Any opening up of trade ties between the world's two biggest economies is a good thing for the rest of us.
And finally, Sean, this is a really horrific story, this one. At least 6 people have died and 24 wounded in a shooting at a July 4th parade in the Chicago suburb of Highland Park.
Police have taken into custody a 22-year-old man and named him a person of interest. The gunman probably fired on the festivities from a rooftop using a high-powered rifle that was eventually recovered from the scene. This is the latest mass shooting. It follows an assault on an elementary school in Texas in May that killed 21 people. There's also the gunning down of patrons in a supermarket in Buffalo that killed 10 people. Still, Congress can't seem to do much about gun laws in the US.
Yeah, when's it going to end? It's just tragic. All right, now, Sean, up next is the Fear and Greed Daily interview, and your guest today is Diana Messina, AMP Senior Economist.
That's right. We talk about the Reserve Bank decision, and she tells us how many more rate rises are on the horizon. Not good news, fellas. Not good news.
No, certainly not. It's coming up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Michael.
It's Wednesday, the 6th of July, 2022. Make sure you're following the podcast and join us online on LinkedIn, Twitter and Facebook. I'm Michael Thompson, and that was Fear and Greed. Have a great day.